The next section that we want to discuss here is basically the government grants. Friends, you would recollect our discussions on India's 20, where we said that government grants is recognized over a period of time, basis the parameter of when it is probable that the conditions attached to the grant will be met, and of course, that the grant will be received, right? Now, within the framework of India's 41, which is agriculture, we look at the grant, for example, in two forms again. One is an unconditional grant and second is a conditional grant. What is critical to understand is that as far as the unconditional grant is concerned, there's no problem. So we would simply say when it becomes receivable, we recognize it, let's say, at its as an income. It's pretty much like a grant without a condition. Okay, as and when it becomes receivable. So there is no denial. There's no difference between Ind AS 20 and Ind AS 41 in these two perspectives. They're all the same. But the moment we refer to the conditional grant, the key element is that the grant can only be recognized when the conditions are met, right? That's a key differentiation. Okay, wherein under Ind AS 20, we used to say that a grant may be recognized when it is probable or when it is likely that the conditions will be met. So you can still recognize the grant, let's say in the course or in the due course. But for Ind AS 41, there is a clear requirement that the conditions only when they are met, that would be the grant would be recognized, right? Which means that even if you're, let's say having a condition, or let's say, maybe produce the agriculture or conduct the agricultural activities for, let's say, for a period of 10 years, right? You're quite certain, you're reasonably certain, there's reasonable assurance that you will be able to complete those activities over these 10 years of time. But you can only recognize the grant at the end of the 10th year when all these conditions are met, not in the due course. That is something which is an element of consideration as far as the recognition and the measurement of a conditional grant is concerned. Okay. So if I say, for example, it were not, let's say, for let's say a biological asset measured at fair value less cost to sell, but it were, let's say, a grant relating to a biological asset measured at cost, again, very rare, then only you can use Ind AS 20. Okay. And also you want to remember, by the way, if it were a bearer plant, then any which ways Ind AS 20 shall apply, because a bearer plant is not within the scope of Ind AS 41. So you need to be careful in assessing or reading the information and apply the scenarios accordingly. Let's say we are given this particular scenario. It says that a government grant requires an entity to farm in a particular location for 5 years and requires the entity to return the entire grant if it farms for less than 5 years. The question is, when shall the grant be recognized? When shall the entity recognize the grant? Very simply put, only after 5 years of time. Very, very clearly. There's no other substitute to that part. Straightforward, we're saying the recognition criteria: grants related to biological assets which are measured at fair value less cost to sell are recognized as income only when the conditions are met, which simply means it can only be recognized after 5 years of time, not before that, right? So the conditions would only be getting met after 5 years of time. That's where this grant is recognized as an income. Okay. Let's have a look at this scenario. Would your answer change if the grant allows part of government grant to be retained based on a passage of time? Now, in this case, we are of course talking about a proportionate recognition. This should be permitted because the condition of passage of time is getting met, right? So only in this restricted framework, we can argue that yes, the government grant can be recognized over a period because the passage of time itself is a condition. So the precondition is getting met, and accordingly, the recognition of the grant can be done here. Okay. The final leg is about disclosures. We need to disclose, for example, multiple things, including, for that matter, you look at the description of each group of biological assets and activities, right? With respect to the quantified and narrative descriptions, the aggregate gain or loss on the initial recognition and from the changes in the value, a reconciliation for the changes in the carrying value between the beginning and the end, any restricted assets, right, should be also reported. There could be also instances when you are measuring your biological assets cost, those specific scenarios wherein the fair value cannot be measured. So you need to give all those assessments. And finally, in case there are government grants, the nature of the grant, the extent of the grant, in case there are contingencies or unfulfilled conditions, they also need to be reported, right? Not a huge standard, again, as I said, but it has its own significance, right? So what you want to remember across is biological asset or agricultural produce at fair value less cost to sell. In a very specific scenario, biological assets may be measured at cost when the fair value is not identifiable. The government grants, you would look at whether the grant is conditional or unconditional. It depends on that. If it's unconditional, you recognize as income when it's receivable, right? And when it is conditional, only after the conditions are met. Okay. In case there's a biological asset measured at cost, then you use Ind AS 20 framework rather than Ind AS 41. Finally, disclosures, we refer to that. Key disclosure would be reconciliations and about the grants, etc. You need to do the recognition. Of course, it's pretty much the same recognition as that for an asset. Reliable measurement can be done of the cost of the fair value. The control is there, and of course, the benefits are probable. That is something which is the key aspect. Since we do not have any corresponding standard in the AS frameworks, there is no key differences which are available in this discussion. Okay. What we now want to discuss as a part of the final discussion of the standard, we're looking at the question bank to test our knowledge of those concepts that we have dealt with under this particular standard there. Let's have a look at the first question. This is adapted from the November 19 examination question. It says that Arun Limited is an entity engaged in plantation and farming on a large scale and is diversified across India. On 1st of April 18, okay, the company has received a government grant of 20 lakh rupees, subject to a condition that it will continue to engage in plantation of eucalyptus tree for a coming period of 5 years. The management has a reasonable assurance that the entity will comply with the conditions of engaging in the plantation of the trees for a specified period of 5 years and has accordingly recognized a grant of 4 lakh rupees as income under Ind AS 20 framework. Okay, the question is whether the treatment done by the company is appropriate. If no, what is the correct treatment? Okay, again, we just talked about it, about the recognition of the government grant, right? Whether it pertains to, Ind AS 41 or does it relate to Ind AS 20? That's something which is critical, right? If you look at the entities engaged in plantation and farming, very likely Ind AS 41 would be applicable. So the very aspect of applying Ind AS 20 may not be appropriate on the face of it. Okay. However, you also want to consider that, first of all, whether, as we said, that Ind AS 41 applies, that is whether the entity is primarily into agricultural activities or not. Very likely it is yes. So you ask the next question there, whether the biological asset is measured at cost, right? If that is the case, then Ind AS 20 can still be applied. Okay. The third scenario is that if, for example, this was not measured at cost, is this asset, is this plant a bearer plant, right? In that case, again, Ind AS 20 would be applicable. Okay. So on those basis, these two parameters, whether the biological asset is shown at its cost or whether it's a bearer plant, in those cases, the treatment done by the entity would be correct. However, if none of these, neither of the two criteria is met, and only Ind AS 41 is applicable, where you're looking at, of course, fair value less cost to sell, then you cannot be allowed to recognize the government grant on a proportionate basis. You will only be allowed to recognize upon fulfillment of the conditions, right? Only upon the fulfillment of the conditions, that entire government grant of 20 lakh would be recognized, let's say, after 5 years, right? So we need to give this entire explanation, right? That whether the treatment is done appropriately or not, you need to explain this part, that since the company is primarily engaged in plantation and farming on a large scale and is diversified, it is likely that it is into the agriculture activities. Okay, and then you look at the eucalyptus tree. If it meets the definition of, let's say, a biological asset, right, to be measured at fair value less cost to sell, or is being measured at fair value less cost to sell, the treatment is incorrect. You have to wait for the 5 years, for example, this entire plantation activity to take place. Until then, you cannot recognize the government grant in the books at all. The second aspect, of course, is if it were a bearer plant, as we were discussing, if it were a bearer plant, then the treatment is correct, wherein, of course, the relevance of, or the significance of, or the applicability of Ind AS 20 would be, of course, available to the company there, right? So need to explain all these parameters as a part of your solution as you try to discuss it here. Okay, let's have a look at the formal solution. It says that Arun Limited, for example, is engaged in the plantation of farming on a large scale. This implies that it is actually into the agricultural activity. Of course, if that was the case, then Ind AS 41 is applicable, right? Also, it is mentioned that the grant has been given subject to a condition. It means it's a conditional grant, and in case it's a conditional grant, we can safely assume that the particular biological asset, from the agricultural activities perspective, may be measurable or would be measured at fair value less cost to sell. And in those scenarios, you can only recognize the grant after 5 years of time, and the treatment done by the entity is incorrect, right? Unless, although it's not mentioned, unless the grant is allowed over a period basis, over a periodicity, and only in that scenario, right? Even if Ind AS 41 is applicable, even if that eucalyptus tree is measured at fair value less cost to sell, if the grant has a condition that it can be given, or it can be provided, for example, it can be available to the entity over the period, then of course that treatment is permissible, right? Alternatively, it may be assumed that Arun Limited measured its biological asset at cost. Then, of course, whatever is the accounting treatment done by the company would be applicable, and it would be a right treatment. Okay, so that's what is basically going to be shown. And in case, again, as I said, that the tree is considered as a bearer plant, again, Ind AS 20 would be applicable, and the treatment would be done accordingly. The fair value less cost to sell for these so-called pine trees, right? So if I do the calculation here, which is 39,000 into 0.312, that comes at this is 12168, and we're talking about 38,000 into 0.331, which comes at 12578. So effectively, these are the values at which we need to recognize these pine trees respectively on 31st of March 19 and 20. And the difference, which is 12578 minus 12168, that comes at 490 rupees, for example, right? 390 rupees, sorry. No, it's 490, of course. 410, my bad. Simple calculation. This 410 would be recognized as a difference of the fair values, right? And would be recognized through the statement of profit or loss. Okay, that's what the question expected us to do. So what we want to also mention is that these plantations are a part of your biological assets measured under Ind AS 41, and the measurement criteria would be fair value less cost to sell. And we look at, of course, the present value considering the discounted value of these, not matured or less than matured pine trees at respective dates to the amount of 12168 and 12578 respectively. And the delta or the change of the difference between the two values of 410 should be reported through profit or loss account. Okay, let's have a look at the formal solution. It says that a biological asset shall be measured on initial recognition at the end of the reporting period at its fair value cost to sell, what we talked about. In the given scenario, the fair value of only the mature trees is available. So we picked those values because we are still not talking about a mature tree at this point in time. So we look at the fair value of the mature tree as a starting point, and we discount that in today's price using that discount rate which is available. So we've got the respective values of 12578 on 31st of March 20 and 12168 as on 31st of March 19. Okay, so the difference between the two values, which is 410 rupees, is recognized immediately as an income in the statement of profit or loss. All right. Well, that's what it is in this entire standard that we wanted to cover. Thank you very much and wish you all the luck. Bye-bye.